Welcome to JL Core's monthly market report for September 2022. My name is Jessica Lader and I'm the proud broker owner of JL Core. Today I'm going to walk you through three of the most important topics happening right now in the housing market. We're going to go over mortgage rate projections from the experts. We're going to talk about home prices and how the inventory is affecting those prices. And we can all agree that this year the housing market has truly been defined by bidding wars, property appreciation, and rising mortgage rates. This slide is a look at the Freddie Mac 30-year fixed rates going all the way back to January of 2022. What it shows is how much mortgage rates really rose from the beginning of the year all the way into mid to late June. And since then, you can see that there's been a lot of fluctuation. So why is that? Well, inflation is the enemy of long-term interest rates, and that's certainly something that we are following right now. We know that the Federal Reserve doesn't determine the mortgage rates, but they are certainly making moves right now to ease inflation, and when that happens, mortgage rates tend to respond. Everyone wants to know, what are the projections for mortgage rates moving forward? Where are they headed? This slide shows projections from Freddie Mac, Fannie Mae, MBA, and NAR. This is the latest data we have as of August of this year. And if we average all of their projections together over the next 4 quarters, what we can see over in the right-hand column is that mortgage rates are projected to essentially stabilize over the next year. Fingers crossed. This could be an indication that we owe a nod to the experts, as they predict that the Federal Reserve is going to get inflation under control. I certainly hope these experts are correct in these projections. It appears that low to mid 5s is the projection. Maybe even by next year we'll see the upper 4s. It's not the 3% we saw last year, but it's still not bad and a great time to take advantage. This quote from Lisa Sturdivant, a housing market economist that we follow, says, after the end of the summer lull and as mortgage rates stabilize, we may see a return of buyers and a relatively strong fall housing market. I know that I have seen this recently with my own listings, and I'm looking forward to seeing more of it. We certainly know that rising mortgage rates has caused many buyers to step out of the home buying process. But with these projections at hand, should they play out, we could see stabilization and a very strong fall housing market, especially if this weather holds. Another topic that is on everyone's minds is home price appreciation, the number one question that buyers and sellers are asking right now. What's happening with home prices and where are the home prices headed? What I'm going to start with is this quote from Mark Zandi, chief economist at Moody's Analytics. And he says, I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. So what does that mean? Well, on average, nationally, we project that home prices will continue to rise. I'm confident home price appreciation is still expected going forward based on today's buyers' demand and low inventory. This chart really helps to articulate this. This says the depreciation is slowing, not depreciating, and that we're decelerating. Homes are not actually losing value, but the purchase process is just slowing down a little. So let me walk you through this. This is percent year over year of home price increases for 2022 so far. And this data from CoreLogic says what we can see here is that year over year, January, February, and March home prices were still accelerating at a pretty rapid pace. Record-breaking home prices appreciated at the beginning of this year. But what has happened since then? We've come off that high of 20% year over year home price appreciation, and it's starting to cool. And that's what we can see in May, June, July. That's the deceleration in process. The pace of appreciation is slowing. That's deceleration. It's not depreciating. The prices are not depreciating, and where we could have we'd have negative growth is when we would see depreciation. We still know that there are plenty of buyers out there. There is still low inventory. We know that prices are projected to continue to rise, but at a slower pace. A year ago, a listing price was the floor of the negotiations. I could list a home a little higher than what I thought it was worth, and then multiple offers would come through. We'd have a bidding war, and it might go 50 to even 100 over asking. Now what we're seeing is that the listing price is the ceiling, and there is a little bit of buyer power, and so there might be a little bit of negotiation down from that listing price. But we're not seeing the value really dip. We're just seeing the prices decelerate. Home price appreciation is slowing, not depreciating on an annual basis. And I think this quote from CoreLogic really helps to articulate that. It says annual home price growth slowed for the third consecutive month in July, but remained historically elevated at 15.8%. As 30-year fixed rate mortgages neared 6% this summer, some prospective homebuyers pulled back, helping ease overheated and unsustainable price growth. We know the past 2 years have been an anomaly. The price growth over the past year, in particular, was unsustainable price growth. Looking ahead, CoreLogic experts see a more balanced housing market with year-over-year appreciation slowing to 3.8% by July of 2023. So by July of next year, CoreLogic is projecting that home prices will still be appreciating in value, but just at a much slower pace. So I bring this graph to you to show that the latest home price projections for the year and the average of all 7 forecasts that will follow is showing 11.3% annual appreciation for 2022. Why is that? Well, this slide shows that inventory is still historically low. And if we look at this data from calculated risk, this helps us compare where we are today versus where we are over the past few years. So if you look at that blue bar on the left, you can see that inventory is 26.3% higher than it was the week ending September 2nd of last year. This is creating more opportunities for buyers. It has helped with the softening of home prices for sure, but compared to the same week in 2020, today's inventory is still down 5.4%. And compared to 2019, prior to the pandemic, inventory is still historically low, down 42.2% from where we were that same week in 2019. So that's what's continuing to drive upward pressure on home prices. Inventory is still low. We still have home buyers in the market. Yes, we've seen a softening and a cooling, but home prices are projected to continually rise, primarily based on this inventory data. All in all, if you or anyone you know had a hard time gaining traction in the real estate market over the last year, now might just be a great time for them or for you to jump back in. Contact us today to learn more about what your real estate market is doing. And don't forget to follow us on Instagram. Thanks so much and have a great day.